Afternoon, everyone. Thank you so much for being here today and joining us. We'll give folks just a minute to come in, but I know that we want to make sure that we get through the bulk of the presentation today and are going to move kind of at a clip to make sure that we get all the information in. So I won't keep you waiting for too long. Hi, good morning, good afternoon. I'm Danny Delaney. I'm the Entrepreneurial Economy Program Director at ANCA, the Adirondack North Country Association. Welcome. You're in the right place if you're interested in talking about lowering barriers through new lending opportunities. Today is Tuesday, May 14th, 2024. We will be recording this presentation, so if you know somebody else who might be interested in the content or want to share it with maybe some of your constituents or other folks in the region, please do that, and we'll be sending that out to all participants. Thank you so much for being here today. Starting in a few moments, we ask that all participants stay muted during the presentation, but there will be time for questions. You can also type your questions into the chat during the presentation at any time, so please do feel free to do that. We have some folks managing the chat, and we will make sure to get to them. If we can't get to your questions, we will get them asked after the session and send out the answers in that way. We'd also like to acknowledge that ANCA conducts its work and its staff and many board members live on the traditional lands of the Haudenosaunee and Abenaki people. The full land acknowledgement is in your chat if you want to take a look at that. Thank you so much for being here, like I said already. Sorry. And a few extra just notes before we get started. Include, if you want to update your name as it appears on Zoom or add your pronouns, you can click on the participant button at the bottom of your screen and select rename from the drop-down options next to your name. If you want to introduce yourself in the chat, please feel free to do that as well. Participants will remain muted, as I mentioned. We'll have time for Q&A. I know I'm repeating myself a little bit, but more people coming in. And anytime you can ask questions in the chat. So welcome. The Adirondack North Country Association, we are growing the new economy. There we go. Our vision is a new economy that works for all. Our mission is to build prosperity across Northern New York. And our big idea is to create and sustain wealth and value in local economies. We're a nonprofit, non-governmental organization established in 1955. So we've been around for, just a few minutes. And we have 23-ish staff. I say that because, we're always gaining some, or somebody moves on to a different job, but 23 to 25-ish staff, I think, today, based in Saranac Lake and across the region. Some of our folks work remotely. Some of them work in Clayton or Watertown or that area, all across the North Country. We are not a CDFI or lending organization, although we do have a soil loan fund for farmers and agricultural producers. That's something you can talk to our team about if you're interested. But we're really here to kind of spread resources and messaging around access to capital. Over the last 5 years, we've been able to create $65 million for local businesses, create 150 jobs, support 3,400 existing jobs, and have positive impacts on 195 communities, as well as influence state and local policy for our region. We serve these counties of Northern New York. If you're not from our region, just a note that these are largely rural populations. There are a few micropolitan areas, and we serve about 1.26 million people across this large area. We work in a couple of different program areas, so small businesses, which is why we're here today, food systems, clean energy, and we're the host of the Adirondack Diversity Initiative, so focusing on and promoting diversity and inclusion across the rural North Country of New York. So why are we talking about this, and why is access to capital kind of coming up for ANCA as a regional issue? It's largely in part because of our Center for Businesses in Transition program. 5 years ago, we started the Center for Businesses in Transition as a cooperative, collective action type program that brings together chambers of commerce, IDAs, other lenders, or community development organizations who are really focused and interested on making sure that businesses across our region are able to find a successor and move on to the next generation. For the first 3 to 4 years of the program, we've really developed tools, resources, webinars, shared understanding and knowledges about what the small businesses owner needed to be able to retire, build a succession plan, and move forward. We continue to do that work, but over the last 2 years, we've been focusing a little bit more on what the aspiring entrepreneur needs to take over that business. And some of the challenges that come with taking over an existing business, as you might imagine, are access to capital, trying to find funding to be able to make that work. The economy of New York's northern region is built on an ecosystem of rural small businesses with few to no employees. Owners of these businesses experience significant barriers to accessing, the financing needed to advance their goals due to limited capacity and insufficient existing upfront capital. These issues are compounded for individuals who face systemic barriers, including members of low to moderate income, BIPOC, LGBTQIA populations, plus populations. If someone has disabilities, they're an immigrant, and other communities historically excluded from entrepreneurship and financing. These issues are compounded by living in a rural area where there are banking deserts, and financial assistance is not always as readily available or easy to access. While you may not, so these are all the folks that work with us in the Center for Businesses in Transition program. So lots of different partners across the region. I see some of them are on the call today. Thank you so much for joining us. And we're really grateful to be able to work in partnership around this particular issue, but also to be able to kind of move and expand it into additional issues and leverage points that will help our folks trying to take over a business or to start up a business access the funding they need. There's information that you can access at any time on our website about the program, what we've done since 2019, which was the start of the program, and you can dig into that if you are interested. Some case studies. I'll have Mihaela put the case study for the last 5 years into the chat. So, oops, sorry, let me go so fast. So the Center for Businesses in Transition is based on shared learning and shared resources. We will continue to build partnership with that program and try to leverage funding. So in this case, we're really talking about leveraging funding to keep the program running, but also leveraging funding to ensure that our businesses are able to transition and there's capital that is available for those business transitions to take place. One of the things that we've worked with for a couple of years now in this program is looking at worker owners and worker cooperatives as transition models. I just wanted to make sure that I pointed this out here, but to say there are some really exciting resources for worker ownership capital and worker cooperative capital available. If you are interested in that, I actually think one of those folks who's in the call, Joe Maricino, but if you are interested in that kind of thing, cooperatives, please reach out to us. We would love to sort of share some resources and financing specific to that. But today we'll be focused a little more on solopreneurs, people who are trying to take over a business as one-person shops, or maybe two-people shops, but small micro style businesses. So I talked a little bit about these issues already, but we have some resources to address this in our region and opportunities, but these are some additional opportunities you should know about. We are not experts in lending or accessing capital, but we are sharing as we learn of new CDFIs that are available that will look into our region, of social impact funders who might fund some projects that are harder for some of the folks locally to be able to fund. We see and hear these things from our aspiring entrepreneurs trying to take over a business, but we also see and hear there's a need from folks in our Buyer Days program, right? So folks who have small craft shops or things like that, and they're trying to wholesale. So they're trying to scale their business to a larger market. They need access to capital to do that. Sometimes they need bridge financing to move in that direction. So that's who we're hearing this from. These are resources that we want to make sure that we told you about. We're not experts in them. We're not necessarily recommending any one of these, these places, but just kind of making sure that if we hear about something, we're sharing it with the folks in our communities if it might be of use or helpful for them in accessing financing and advancing their business goals. So we have a regional and rural challenge. We have an aging population of small business owners. We have a shrinking regional population. We have a lack of access to technology and infrastructure, greater impact by macroeconomic headwinds. Rural entrepreneurs often are more impacted by higher business costs, including rent, utilities, gas, financing expenses. if anybody has been keeping track of the housing crisis and how much more expensive it is to build a house or build a housing apartment building or something in our region that it is even further downstate, this would be really, relevant and important to you, and very clear from that example. Scarcity of local banking and lending. So, right, we have a lack of regionally adapted financing options for small businesses and aspiring entrepreneurs that present challenges throughout the business cycle. So we're here, like I said, to talk about strategy, to share resources, some other things that we are doing and looking into that we would love if you are a regional community development type organization or economic development organization and would like to talk about this more. We'd love to talk to you about it if we haven't already. We want to increase local lender resources, capacity, and available capital for the folks that do have and are able to lend in our region already. We're looking to support social impact fund development and inclusive lending strategies across the region. One of our next goals and strategies is to develop and fund a region-wide access to capital barriers analysis. There is a link in the chat. Something like that has been done in the Appalachian Regional Commission region in Appalachia that I think would be a good model for us to do here. We're looking at developing a regional strategy to support diversity, equity, and inclusion and belonging to support the success of the entire North Country small business ecosystem. And we're looking to schedule a follow-up webinar within the next month or two about changes to SBA lending programs for capital providers. I think we might have some folks from SBA on the call here today as well. So thank you for being here. If you're interested in any of these other type initiatives or things that we're doing and thinking about, please don't hesitate to reach out. We'd love to have you as a partner or to talk about those strategies as we move forward. So what's a CDFI? So this is really important. Today we're talking to a lot of folks who are in CDFI spaces. Community development finance institutions are private sector financial intermediaries with community development as their primary goal. They share a common mission that they're trying to help folks who don't necessarily have access to lending. So these typically, not always, but typically CDFIs cannot be the first person who lends. Usually they serve as gap lenders. So if you are a small business owner and you're trying to get financing and the bank says no, or the bank says no, but we'll fund this portion of it, then you can move on to sort of a gap lender or somebody in the CDFI space to say, hey, for one reason or another, I don't have the right, sort of portfolio or the right business plan or the right sort of like credit score to be able to get traditional commercial financing. And then there's this whole category of financial institutions that can help folks do that. We're really lucky to have a CDFI in our region that does this across the North Country. So AEDC, whose link is also in the chat, so please check them out. There's the link to the page in your chat as well, where all the CBIT partners are. So if you're looking for a lender and want to look for a lender locally, check out your closest CBIT partner to wherever you are. And they can tell you who has loans, who has grants, who's a good, what in St. Lawrence County might be the right fit for you. And so always try to, look locally and see if those lenders are going to be able to meet your needs. So we're lucky to have those things. The Lake Champlain, Lake George Regional Planning Board is a little bit different. They're a regional planning board, but they do also have some lending that they do. So check out all of those local things. Today we've done a number of different programs highlighting a lot of these other organizations. So today we're really just focusing on highlighting some of the ones that we haven't highlighted before that we know serve our region, or folks that we just heard about. So again, not the experts, but trying to make sure that as we find out that there are more resources, or we find out that there are connections that you could be making that might support your business, that we are passing those along to you and your constituents. So we're going to do a quick poll to just kind of see who's in the audience today. So I'll launch that and then we'll go from there. So just give me 1 second to do that. Whoop. Zach, did you log in after me?
It might have been last in on an ANCA.
Can you try doing that? Or it might have been Kim. Can you try last?
It might have been me. Let me.
Okay.
Is it accessing business financing?
Yeah, you got it.
All right, let's, is it out there now?
Can anyone see it? I can't, but if you can put your thumb up if you see it, that'd be great. Good. Yeah. Okay. So just doing a little bit of a quick poll for folks. Are you seeking a loan for your business or startup? Are you looking to find new financing resources for the client or region that you serve? And have you experienced challenges in accessing finance for your business with local commercial lenders in previous attempts? Feel free to fill that out. For those of you who don't know, Zoom has this really fun thing where if multiple people from the same organization log in, whoever the last person is the only person who can launch the poll.
Can folks see the poll? I'm just not seeing any results coming in.
Oh, maybe they can. I don't know.
Cannot see it.
Okay. Hey, Zach, you may need to launch it.
That's okay. If you
Let's see if we can.
There you go.
Got it.
Oh, great. Perfect. And then Zach, I'll have you share out the results in just a minute. We'll give everybody a minute to fill that out.
I want to go on record that I specifically went and logged out of Zoom before I came in.
Yeah.
So we're at 6, 7, 8, 9 responses, 10, 11, 12, awesome, 13, whoa, 16. Why don't we give it 30 more seconds and then we'll close it out.
Okay, great. Well, whoever can see the results, if you could report out, that would be great.
Hopefully you can see the results. No? Okay. Who knows? Are you seeking a loan for a small business or startup? We have 1 actively seeking, 3 considering a loan, and 13 not considering a loan at this time. Question number 2, are you looking to find new financing resources for a client or region that you serve? 16 say yes, and 3 say not at this time. Have you experienced challenges in accessing financing for your business with local commercial lenders in previous attempts? Let's see, 16 out of 17 say yes, I have experienced challenges. 6 out of 17 say I have experienced some challenges, and 5 out of 17 say I have experienced no challenges.
Awesome. Thank you so much. Thanks for sharing those, Kim. And I hope that gives our sort of lenders on the call today kind of just a little bit of a smattering of, where folks are at and what they're looking for in today's session. So I'm excited to introduce our panelists today, and thank you so much for being here. And I'm going to close out of my screen in just a moment, and we'll pin them to the screen. We have Jennifer Moon from Momentous Capital / CDC Small Business Finance, Ascendis Jose Made. If I said your name wrong, I'm so sorry. Please forgive me. Care from Boston Impact Initiative, Alexis from CRF USA, Jonathan from Lendistry, and Destiny from the Community Loan Fund of the Capital Region. So I'm going to stop sharing my screen and we're going to pin those folks to the screen. So as we're asking them questions, it'll be easier to see them. Thank you so much for doing that. Mahela, as we get started. Okay, so I'm going to go ahead and start facilitating the round of questions that we have for today. I also will invite each of those panelists to reintroduce themselves and make sure folks caught their name and what organization that they're with. So the first question we're going to ask you is to introduce yourself, your organization's mission. Who do you serve in terms of geographic region or demographic? So thanks for being here. Care, do you mind if I start with you?
Yeah, not at all. Hi, everyone. Care Patel with the Boston Impact Initiative. We are a place-based impact investment fund based out of Roxbury, Boston. And primarily our geography that we're serving is, Massachusetts and New England at large, but also a little bit of upstate New York. And our focus has really been on closing the racial wealth gap by supporting communities of color and other underserved populations and in preparation for the new majority. So our mission is focused on transforming this field so that economic and racial justice really become integral to any part of that strategy. And a big part of how we go about that is this concept of integrated capital. So not connecting folks with just the capital, but also mentorship, networks, civic resources, so they get sort of the whole wraparound support. That's so critical for growing small businesses that have not been able to break through that glass ceiling. But excited to be here today.
Thank you so much, and thanks for sharing your mission with us. Jennifer, do you mind talking a little bit about who you are and what you do?
Good afternoon. Thank you for having me. I'm Jennifer Moon. I'm a loan officer with CDC Small Business Finance. We are a national lender serving the state of Michigan, providing an all-inclusive access to capital, supporting BIPOC and underrepresented communities. I have a lending ability up to $350,000, which is with a lot of leniencies in our credit box. Thank you.
Thank you so much, Jennifer. And you're based not here, but you can lend here, right? I was just talking to one of your other counterparts, so I just want folks to know that.
No, yes. Even though I'm not based in New York, I have the ability to lend fully throughout the state.
Thank you so much. We have someone from, let's see, we have Alexis. How about you? Do you want to go?
Sure. So good afternoon, everyone. My name is Alexis Dishman. I'm the Chief Lending Officer at Community Reinvestment Fund. We are a national community development financial institution. Our mission is to improve lives and strengthen communities through innovative financial solutions. And we do that in a variety of ways. One, we're a capital provider. We also are a technology service provider. We are a national CDFI, which means that we lend all over the United States. And we're a supporting organization. So from the perspective of our lending, our smallest loan is $100,000 and will go up to $5 million. And I just want to note, as a technology service provider, we have a platform that we created called Connect, which allows entrepreneurs to log onto a website and get connected with over 150 CDFIs. So that's one option that you have if we're not the right fit for you. Thanks for having us today, and thanks for hosting this panel.
Thanks so much for being here. We really appreciate it. Jonathan, do you want to introduce yourself as well? Oh, we can't hear you. Still no. Okay, he'll be back. I'm taking that. I think that's what he said. Destiny, do you want to talk a little bit about who you are, where you're from, and why are you here today?
Yes, thank you. Good afternoon, everybody. My name is Destiny Watkins. I'm the Director of Training at the Community Loan Fund of the Capital Region. We're a private nonprofit organization in upstate New York, covering 11 county service area in the upstate Capital Region. We're also a CDFI. We do two major services, providing training and assistance for entrepreneurs, including business plan development, access to resources, assistance with business planning and development services. And then we do lending to low income owned and BIPOC owned businesses, up to $25,000 for startup businesses, up to $50,000 for businesses within their first year. And we also do loans to startup nonprofit organizations doing community impact projects.
Awesome. So glad to have you here. Thank you so much for joining us. Jonathan, do you want to try again? Nope. Oh no. Okay, we'll see if he can maybe log in on his phone or something. We're also supposed to have Jose from Ascendus here. I don't see him, but I just want to make sure I open up the space in case he is available. No. Okay, that is fine. All right, so let's move on to the next question. Jonathan, we'll try to get back to you and make sure that you're included as we move forward. So some of the borrowers that you serve have very specific interests or are parts of very specific underserved populations. Why is that important for you to do? What are the barriers that particular group of constituents face that make your role so important in accessing capital? What gap do you fill? So I'm going to kind of get us started with Boston Impact to talk about social impact entrepreneurs, and then we'll just kind of bop around from there.
Yeah. Thanks, Danny. So our focus on bringing integrated capital to our communities is born out of this reality that a lot of entrepreneurs get to this point in their small business, whether it's early stage, whether it's kind of working through that seed series A, where we call it the valley of death. There's this in access to capital, and sometimes that means patient capital, non-extractive capital, flexible capital, so being able to lend across the capital stack and not necessarily a debt investment. But also this idea of connecting them to a network that supports them along that growth in terms of other non-dilutive capital, including mentorship, including civic resources. And I think it's really important in the role that we play to not only really live up to meeting an entrepreneur where they are, but also focus on building a solidarity block with other peer funds, with other social entrepreneurs, because supporting these entrepreneurs really takes community. It's something that we talk about all the time with our peer funds, and something that we take our prides in developing those connections within the network. So if we aren't even able to support someone directly, that we can pass someone over or work in collaboration with others. But I think we see so frequently, and folks come to us, this conundrum where they've taken on a predatory loan, or they just haven't been able to find capital that really meets their needs, and is not too extractive, that allows them to really invest in their growth. And I think that's a really important part of the place and the role that we play in this ecosystem.
Thanks for sharing that, Kara. I'm looking forward to hearing some more examples as we move on with the questions about some of the interesting loans you've done. It's been great to meet with some of your counterparts and hear about some of the really innovative kind of businesses that you work with.
Absolutely.
Yeah. So Jonathan, let's give it another try. You can answer both questions at once. No, still can't hear you. All right, I'm going to come back to you. Destiny, do you want to tell us a little bit? Oh, sorry.
It looks like I'm going to ask you to unmute, Jonathan. It looks like maybe you were still muted.
Can you hear me now?
Yes, yay! Okay, great. All right, so who are you? What do you do? What are the barriers and gaps that you're filling?
Okay, sure. So apologies for the technical difficulties, but appreciate the patience. Jonathan Katz, Senior Managing Director, located in New York. I'm downstate here on the East Coast, so I oversee the East Coast operations for Lendistry. We're a minority-led and technology-enabled small business lender. We provide economic opportunity and progressive growth for small business owners and their underserved communities as a source of financing and financial education. So we have a center by Lendistry as well for technical resources. But what makes us a little bit more unique is versus some of the other lenders out there is that we have both a CDFI designation. We're also one of 16 non-bank SBA lending license holders in the country, and we have a particular strength in loan sizes up to 150,000, given our expedited process that we have in place now. But we do go up to 5 million for working capital, business acquisition, sort of regular way, but then also up to $10 million in commercial real estate. But again, that sweet spot where we really excel and differentiate ourselves in that 150K space. In terms of the second question, can you just repeat that really quickly, because I was kind of fiddling with the technology in the meantime.
Not a problem at all. So some of the borrowers you serve have very specific interests or specific underserved populations. So kind of what are the barriers of that particular group of constituents, and how do you fill in that gap?
Yeah, so what we found is there's like this really huge open space between what I would say is like bank capital, and then there's predatory capital. So like, I've been, dealing with that large empty white space for quite some time, for the last 7 years myself. Our target market are minority small business owners, but then also underserved communities, like rural markets, like what we've been talking about in some of the other communities that have been having trouble with access to capital. We've provided $9.8 billion in small business loans and grants, supporting 634,000 small businesses. But notably, 41% of those borrowers have been in Justice 40 communities. So again, it's our strong view that just because a business isn't bank eligible or lacks access to bank capital in the case of some rural markets. That doesn't mean that they should be forced into some of the predatory options that exist out in the market. So we think we're filling that space.
Thank you so much. So Destiny, I'm sorry, I jumped to you and then jumped away. So I want to make sure we get back to you. And do you want to talk a little bit about how you're filling that?
Yeah, so I would say some of the barriers that we encounter, particularly with our coverage area, is sort of lack of access for startup capital for small businesses, particularly because we focus on, low income individuals and BIPOC owned businesses that traditionally have experienced, maybe some credit hiccups or some credit issues. So they may not fit the bank profile per se for access to commercial lending. So they're either kind of stuck with potentially doing personal loans or other, as Jonathan mentioned, predatory options that are available for those sort of quick payday loans and things like that. So that's really our niche, is helping individuals get that sort of initial startup funding to get their business started, and then potentially be able to grow and access capital with a more traditional lender, for their second year and things like that, once they sort of have that track record. So those are sort of some of the things that we're seeing. And additionally, looking at smaller dollar amount loans. A lot of other lenders sometimes have sort of larger amounts. So we also are able to sort of address that need for maybe smaller capital loans, maybe $5,000, and things that may be a little bit too small for some of the other, available options out there. So trying to work with solopreneurs and micro enterprise businesses to get started and access to capital as well.
That's awesome. Thank you so much for sharing that. Alexis, do you want to jump in with, what you do and how you're filling some of those gaps for your constituents?
Sure. So one of the things at CRF that we do that I think is a little different is we do try to come up with some products that are innovative, or we stretch our credit box. So where others may have some concerns around credit as it relates specifically to credit scores, or may have issues around collateral. We've tried to develop products, specifically those around working capital, that provide additional supports to entrepreneurs. It seems that in the CDFI space, working capital still seems to be a bit of a challenge for small businesses, and obtaining working capital to support their needs has been a challenge. And we work a lot with startups, which is also can be a challenge for entrepreneurs to find capital to support them. One example of, how we supported an entrepreneur is just providing the entrepreneur with the opportunity to, one, start a restaurant and bakery, a dream that entrepreneur had for a period of time. This is a woman-owned entrepreneur, and she's really focused on creating jobs in the Minneapolis area. We were able to provide construction financing and financing for staffing. But one of the other things that we provided as part of our loan was working capital, because oftentimes in startups, when you're getting started, you may think you have a budget and you think it's exactly what you expected, but then at times, things cannot go exactly as the best laid out plan. So that's just an example of how we're supporting the ecosystems that we work in.
That's awesome, Alexis. If you don't mind, I'll ask, we have a very mixed group of folks on the call today. So can you just explain the difference between, like, what is working capital? What does that mean for folks? And I just want to make sure that some of the, banker terminology gets translated.
Yeah, no, I appreciate that. And I usually try to make sure I don't get too much into my finance hat when I start talking. But when we think about working capital, that's really things that meet some of your short-term needs as an entrepreneur. So those things that you need in order to really run your business on a day-to-day basis. So when we think about that, we might think about inventory, may think about staffing needs. So if you need to hire someone, maybe as you're growing the business, or you've received a contract, but you need to hire someone in advance, having that cash to support that employee's salary for a period of time until kind of the cash flow starts ramping up for whatever you're thinking about, or you start getting the cash in for your business. That would be a consideration for working capital. Also, if you have a vendor or a client that you're waiting to receive a payment from, which would be considered what's called a receivable. When you're waiting for that money to come in from a client, that may be considered something that you need additional cash to run your business as you're waiting for that payment to come in from the client. So that would be also considered something that you may need working capital. That would be like a working capital need also. So those are just some examples. I'm happy to dig into it further if there are additional questions.
That's perfect. Thank you so much for digging into that and giving folks a better idea of what some of those cash needs might be. Jennifer, how about you? How would you answer this question?
Well, yeah, a lot of barriers I'm seeing, again, not to be repetitive, is especially with like startup businesses as well as early existing businesses to access to affordable capital. I'm seeing a lot of credit issues that may have stemmed from pandemic or around that era, but it's hindering the clients from accessing affordable capital at traditional lenders. So we're seeing a lot of small business owners bootstrapping their businesses through personal credit cards, utilizing their 401 or taking out loans with who are companies who are deemed as predatory lenders. So we come in and we fill the gap to where we don't necessarily want the clientele that is bankable. We look for those that can't get access to affordable capital. And we try to interject with our capital so that way they can get financed at a more affordable rate. One thing CDC is good about is we have the ability to refinance existing business debt. So a lot of business owners start their business or will take out a merchant account, a high interest loan, as a means of desperation to either start or sustain their business. So we have the ability to refinance that debt at a lower interest rate, one, to improve their cash flow, as well as their overall income for the business.
That's awesome. Yeah, that's not something we hear all of the time from other folks, so that's definitely a gap that we hear sometimes. So thanks for sharing all of that. I think I got through everybody on that question. So we're going to sort of jump a little bit into kind of giving you the opportunity to talk a little bit about particular cases for folks who might be on the call. Lots of times the lenders can't tell you the actual business name. That's, just confidentiality, but they might have a story or a lesson from those particular transactions that might be helpful to share, give you an idea of the kinds of things that they would be able to do. So we're going to ask you, if you're interested in answering this question, to raise your hand for our panelists. We live in a large rural region, which presents challenges for accessing capital, especially for small dollar amounts. Do any of you have an example of a small dollar amount, capital or loan that you've given out? What did that look like? How might it have been different because it was in a rural region? How is that, just some examples that you might want to share about these kind of transactions that you've done in the past. Do any of you want to raise your hand and kind of speak to that? Jonathan?
All right, can you hear me?
Mm-hmm. Yeah, we can.
All right, I'm not gonna sound check from now on. I think that we're in a good place now. Sorry. So, just given our business model, and sort of digital fintech approach, we think a little bit less about geography and more about use case, right? So, being in the region that you're in, I definitely understand limitations, but for us, like being a fully digital model, really internet access is really what we're talking about. And I know you mentioned, lack of technology. I don't think that means lack of internet, right? Everyone is here on the Zoom call right now. So a couple loans that we made, I'll give you a couple examples, can talk about, the use case, but then also maybe geography as well. We made a loan, actually the first loan that I made since joining Lendistry was $150,000 to a frozen food manufacturer in Brooklyn, New York. They received a large order from a major retailer, needed working capital to be able to fulfill that order. We were able to deploy that $150,000, to meet the needs of the business. But then again, to be even more specific, looking into a deal that we did last year, we funded a $56,000 loan to a construction business in Saratoga Springs. We didn't need to send anyone upstate to take a look at the business. Like I said, everything we do is digital. so you can fully transact with us. So we think that we have a good understanding in terms of how to deploy these smaller dollar credits, which is, a preponderance of what we're seeing the request for. When I say smaller dollar, under 150K, really to be very nimble and be able to deploy that, agnostic as to geography from our perspective. But again, we have a digital plus personal model, so you can always be in touch with a human being. That's not an overseas credit call. That's not an overseas call center or anything like that. That's, onshore. Again, trying to have a physical presence as well as that digital presence as well.
Thank you so much, Jonathan. Anybody else want to raise their hand? Otherwise, I can kind of. Yeah, Destiny.
So I similar to Jonathan, it's not necessarily sort of the geographic region that we're looking at when we, underwrite our loan requests and things like that. But I can speak to sort of what our process is like that makes it a little bit more helpful for our coverage area and our particular client base. So we've done. I actually used to be our small business lender a few years ago. I did that for about 5.5 years. So working with clients was very rewarding. We've worked with an individual out in Columbia County who was had a business. They had the skills and different things, but her credit profile was not of, wasn't in the space that she could access, a regular commercial loan, even for the small dollar amount she was asking for, which was about $8,000 in order to get a trailer and some equipment so that she could she did sort of concrete sculptures, which were so beautiful. And, it was $8,000 that she needed to kind of get started. She had some contracts, she had some clients, she had some customers, and just based off of some of her, more personal financial situation, she just wasn't able to access the capital. So we were able to work with her and get her funded so that she could, fulfill the orders that she already had and some other stuff like that. Part of our process is to really focus in, particularly for startups, on the business plan and sort of what the expected revenue projections are, what sort of experience the individual has, and see if there's a potential workaround for some of maybe the hiccups or explanations about why things look the way they are, rather than just kind of focusing on a sort of application-based model. So you also kind of get that human element where, yes, we're doing an application, we're looking at, all the things that are traditional in financing applications, but we're also having a conversation about what caused this, what the effects are, and how we may be able to help. So that was one of my more shining moments, and I was happy about that.
I love that. Thank you so much for sharing that. And I love just a really unique example, right? There's lots of great lending for, we hear a lot about big restaurants or big real estate transactions, but something like an ice sculpture, business like that is just very unique. Kara, I'll kind of, if it's okay, I'll kind of pitch it over to you a little bit. I know you have some really unique examples of the kind of lending you've been able to do with that focus on social impact entrepreneurs. Do you want to give it, even if it's not rural, is there an example that you might want to share?
Yeah, I think one of the areas where we might differentiate, and we're actually going to just apply for our CDFI certification on Fund 2, is again playing along the capital stack. So there are just situations that we see, and I see them all the time, where traditional bank debt doesn't work. And it's really a question about how can we deploy flexible capital. And that looks like a lot of different things. A couple of instruments that we've deployed are royalty revenue-based financing. So really tied to when your business is able to generate revenue and putting caps on the ability on whatever we take out from the business. So, once a specific threshold is reached, like that capital really stays in the business. We've even instituted different types of redeemable equity instruments. So, again, we really think a lot about non-dilutive capital and retaining wealth and income opportunities for these communities, not just for the owners, but also for the types of structures that enable employees to also share participation in that. So giving opportunities and pathways for entrepreneurs to buy the equity back or redeem the equity back over time. I think it's really important to think about being capital, how capital is extracted, that we're being something that we think about all the time, and what challenges these businesses to reinvest in themselves and really get through that critical early period of growth that tends to be some of the most challenging for many small businesses.
Oh, thanks so much for sharing that. I really appreciate it. We got to move on to some of the other questions. I'm going to smush a couple of them together and you can choose to answer them or not. Raise your hand if you feel like you have an answer. We've talked about capital stack a couple of times. For the folks that may not know at home, Kara, do you mind explaining what a capital stack is? I'll put you on the spot for it.
Yeah, sure. Well, a capital stack is really the group of lenders, equity investors, folks that are coming in and supporting an organization through a variety of different instruments. This can look like, this can present itself in a lot of different ways. I think when I think about like a large capital equity stack, in the context of investments that we've done, one investment that comes to mind and really comes to mind generally are affordable housing investments and projects that are going on all around Boston. So think about a lot of these neighborhoods that are undergoing really rapid gentrification. One transaction that we worked on that was in East Boston was the East Boston Neighborhood Trust, a really large Latinx community like the greater region, just going through a really rapid period of gentrification and with the just blow up in rent and proliferation of industry here, really wanted a way, and the city is really investing in a way in protecting the rents and livability of that neighborhood. So we worked with a group of other partner lenders to develop what's called a mixed income neighborhood trust, or a MINT. And a benefit of a structure like this, where you can bring a number of different lenders into a capital stack, is within a MINT structure, owners get the opportunity to develop, own, and operate properties that are explicitly in the interest of current residents. It's managed by an existing neighborhood or community development organization. But what's really interesting about it, and something we think about a lot, is it's accountable to the neighborhood. So there's a actual board, a steering committee that can really dictate decisions on the actual portfolio that's controlled by the neighborhood themselves, and that governance influences how your neighborhood develops. So we work in collaboration with a couple of other entities, including City Life, the Boston and Eastern Bank Foundations, and a couple of other private individuals to really make that come to life in partnership with the city. And it's really finding, a lot of organizations like us, and there are a lot of my peers on the call. We do a lot of these kinds of transactions where we're working sort of hand in hand together. These are not, when we talk about these large capital projects, typically there are a lot of opportunities for us to work together to meet those needs. But that was a really exciting and new way for us to be involved in some of the affordable housing investments that we're doing here.
That's awesome. So creative ways to make a multi-layered sandwich to make the amount of money that you need for a unique project, right? That's awesome. I love that. I want to make sure that we have the opportunity to introduce Jose. Thanks so much for joining us today. Do you want to, I know we're going to be running out of time soon, but I do want to make sure that you have the opportunity to just say who you are, what organization you're with, the kind of lending that you do. If you could do that kind of shortly, and then we'll just add you into the questions as we move forward.
Sure, I appreciate that. I'm so sorry, guys. I put it for the wrong time, and I noticed, and I got in frantically. Anyway, my name is Ascendis. We're a community development financial institution. We are headquartered in New York, but we have offices in Massachusetts and Florida, and some presence in Michigan and Georgia. But we are a nationwide lender, and basically we lend to small business owners. We have different loan products. We have line of credits that go up to $25,000. Regular term loans that go up to $50,000. And for the state of New York and New Jersey, right now, we have programs that go up to $150,000. What makes us a little different than banks, we tend to be a little bit more flexible in terms of the credit, in terms of the story, what we look at, we're a bit more flexible. In terms of how long you should be in business, it should be at least 1 year or more. That sums it up. Obviously, there's, little asterisks here and there, but that sort of gives you an idea of what we do, what we, and who we help.
Awesome.
And sorry once again.
Oh, don't worry. It happens. We all have lives and busy schedules. It's fine. Yeah. Great. Thank you so much. So, is there one thing that happens a lot in our rural area? I'm sure that it happens in other places, and talking about putting together a sort of like multi-pronged approach for capital, is that we might some of the folks on the call especially are from community or economic development organizations. They might get a grant from New York State, or one of their constituents who has a small business might get a contract with a state or federal entity and not be able to pay for that without a loan. Is that something that you do at your organization? What does that look like for you? Is this something that you're able to provide, or folks that might see as part of your portfolio? Would anybody like to raise their hand to answer that? Jonathan, you have an example of when you've been able to do that for folks.
Yeah, so that's actually what we call a specialty vertical of ours. We kind of call it internally contractor or purchase order financing. Contractor, not the builder, but you've received a services contract, right? So if there's anything in particular with the state, we participate in the state's EDC contractor program as well. So especially if there's a state municipal contract of any sort in New York, there's a particular participation that we have in that program. But the idea here is we understand that there's a contract from a viable entity, right? When we say viable, government agency, investment grade agency, and we're able to basically front working capital based on the size of that contract, anywhere from 20 to 30%. So, providing, accelerated access to that funding. Essentially, we look at the value of the contract. We say, the payer of this contract is good for it, for lack of a better term. High level of confidence there. And we basically structure a loan that lets you pay us back only when you get disbursements from the contract. So disbursements go into an account. There's a predetermined account. Let's just use 10% as an example. So if there's a contract that pays you $50,000 in different increments, when you get a disbursement of $50,000, we'll take $5,000 of it and $45,000 goes back to you. So again, I'm just using that 10% as an example, but it's really set up specifically to be able to, provide working capital support when that contract has been issued, because we know that there's a lot of lag. And we're actually working on right now in New York. There's a company that is providing, food assistance programs where they provide debit cards, pre-filled debit cards for people who are in need. The company has been fronting and funding those debit cards. So they're actually looking to us for some working capital to be able to help them, fund those debit cards because they basically fully fund them at the beginning of the month. And then those debit cards are able to be used at participating supermarkets across the state. And we're proud to be underwriting that deal actually right now. So looking forward to getting that one done. So hopefully that's a helpful color.
Thank you so much. So I want to make sure we probably have time for one question from the audience today. Does anybody have questions that you would like to ask? You can write them in the chat and we will make sure to put them out there. Oh, I'm sorry. So the question that we do have in the chat right now is what organization Destiny is with. So this is a really great prompt for me to also say for each of you who is on the panel today, if you could please put your name and your organization and any links that participants today should know or see right into the chat. Destiny did have to leave, but she's with the Community Loan Fund of the Capital Region. And we'll be putting all of the links that are put in the chat right now out to the registrants today. But Destiny is with the Community Loan Fund of the Capital Region. Anybody have questions for our panelists? We probably have time for one good question. And I know it's a big group and a lot of information. If something comes to your mind, let us know. I will add in that, if you are sending a client to any of these folks or you are reaching out for a loan yourself, some of the questions that you might want to ask them or that I might ask if I were in your shoes is what methodologies do they use or what weight do they put on credit scores for their clients? What does that look like? How do they look up your credit score? What's a good enough credit score? Do they use different ways to do that? So that might be a question. Do they offer relationship counseling or refinancing? Do they offer deferred payments? Is there somebody that will call you back? And who's that person who's going to call you back? What does the client relationship look like? I know that some folks in the audience today will have questions that they think of later. So feel free to send them our way. We can send them out to the panelists and try to get some information back to you that way. again, this is not a comprehensive list. We're really just here, we've heard about these great organizations through some of our work with CBIT and our participation in the Northeast Transition Initiative program, as well with our just some of the work that we're doing and meeting folks on the street. So I just want to reiterate, there are other lenders, opportunities locally and elsewhere. We know that these are reputable lenders. Please don't fall for predatory lending. And if you have questions about, a lender that you've heard of, please let us know and we'll ask around to see if it's, if anything we can do to support you in making sure that you're reaching out to someone who serves our area and that we know is not going to take advantage of our rural residents. We want to help to make sure that happens. Also, there's a lot of additional money. This is kind of, I mentioned at the top of the hour. Okay, there is a really great question in the chat. If somebody can answer it in less than a minute, I invite you to do so. So raise your hand if you can answer. What is the minimum documentation you need to advise if a prospect should submit a full application or not?
I can start really quick.
Okay.
I like to have a quick conversation just to ask specific questions, because depending on the answer, it might lead to another question just before they even apply. But assuming everything seems, like a possible fit, then in terms of documentation to get a sense of what might be possible, I would say taxes help. That doesn't mean that if they're no good, there's no alternative, but it'll allow us to sort of size the loan a bit. So if it's, the taxes are terrible, then definitely max 25, for example, in our case.
Awesome. Thanks for doing that so succinctly. Alexis, I want to make sure you got enough chance to say some of the things. So do you want to answer that, or is there anything else you want to add in?
No, just I think that makes sense. I mean, I would say that just when you come for financing, be very transparent as it relates to what's happened with your business or what's going on with it. It's very difficult for us to help in any lending institution, whether or not CDFI or bank, if we don't know all the pieces to the story. And it makes it even more difficult when we find things out and we haven't heard directly from you. So we're here to help, particularly in the CDFI industry. So please feel comfortable sharing all the ups and downs so that we can really come up with the best solution for you.
Thank you so much. Jennifer, anything to add? I just want to make sure you got enough time to speak, or is there anything you weren't able to say?
No, pretty much everything was said. Really, for me to assess the financial, on top of taxes, it's important that business owners know that we will, if they're existing, we are going to be asking for interim profit and loss statements. So it's really important for business owners to maintain their financial expenses and revenues, income. So that way, when we are talking about a loan, you know kind of where your business is positioned and whether or not you're making money or losing money.
Awesome. Great. Well, we're coming up at the hour, and I know people probably have a lot more questions. So again, we're really excited about this as part of an ongoing series of ongoing strategy to ensure that we're giving more resources out to our rural constituents about access to financing and what might be helpful there and what is out there. So thank you so much, everyone, for joining us today. We're excited to be kind of some of our next steps are, doing an SBA webinar, sort of like this one, and talking about some of the changes to the SBA lending. We also want to be talking about the money that's coming down through the Inflation Reduction Act and access to capital around clean energy initiatives. So those are some things that you can be looking forward to. We'll send out information about each of these presenters today. If you have questions that pop up, we'll send them out to them afterwards. Please feel free to reach out to me or anyone at ANCA on the small business team. I'll have those folks put themselves in the chat as well. If you say, this was sort of helpful, but what I really wanted to learn about was something else, please do let us know. We're happy to sort of get some information together for you or put on another webinar that answers some of those questions. But we're really want to make sure that we keep you on time today. Thanks for coming. Just a hat tip to Elizabeth Cooper, who wasn't able to say hello because she came on a few minutes late because she had to go to something else, but she's our executive director. She's here as well. And thank you everyone for being here today. And thank you to our presenters for sharing your insights and the work that you do. Take care.